Now let's move to corporate governance. Right. So let's move to the flow chart first. Corporate governance. Keep your notes with you all. The same thing will be repeated in advanced audit and assurance as well. Right. So the good thing in audit is 70% of your advanced audit and assurance syllabus is skills level syllabus. So if I'm teaching AAA, I'm teaching the same thing again. Okay. So the corporate governance, again, it is tested in AAA also. So keep the notes with you all. Okay. Corporate governance. Write it down. Definition of corporate governance. Definition of corporate governance. Definition of corporate governance. Purpose of corporate governance. Purpose of corporate governance. Approaches to corporate governance. Approaches to corporate governance. So approaches to corporate governance, I'll further subdivide into two. Principle based approach. What is the other one? What is the other one? Rule based approach. Principle based and rule based. Next one, ICGN OECD. Just write down ICGN and OECD, yeah? Because no need to understand what it is. It is not in your syllabus. Just I am telling you. Right? OECD and ICG. UK Corporate Governance Code. UK Combined Code. UK Combined Code. So we're going to study UK Corporate Governance. If you won't, just mark it as important. This is what examinable. This is what examinable. This is what examinable. And committees. And committees. If I take committees, number one, audit committee. Number one, audit committee. Number two, remuneration committee. Number three, risk committee. Number four, nomination committee. Nomination committee. Copy this. That's all. And two things important in this flow chart. One is committee and the other one is UK Combined Code. These are the two main areas highly examinable in your syllabus. But when you are doing a case study, a basic understanding important. That's why I gave the approaches and all. Right? Done? Shall we move to examinable points? Right. Corporate governance. Corporate governance. I can say like this topic, theory plus application. But when I say in the very first day, I told it's theory, but case studies are possible. Okay, case studies are possible, but not difficult. That's what I'm telling. Certain areas, I clearly tell you it is difficult. You should prepare. These areas, if you by heart, you can do. Right. Case study is also possible, but still you can write answers. Okay, not like audit risk. Okay, maximum 5 to 10 marks is possible. Just make it 5. For your exams that I am expecting, that's my expectation. I am expecting corporate governance in objective test question, right? Or section C or section 1, a separate theory question. When it comes to theory, examiner can ask about audit committee. Right? Normally, if I analyze the past papers, if examiner is testing corporate governance as theory, most probably he tests functions of audit committee, roles of audit committee. He tested more about audit committee, right? And when it comes to cases, when it comes to case study, examiner tested corporate governance code, and you need to apply that code to different cases, right? That's how I observed throughout the past papers, right? So write it down. Examinable points. Number 1, definition and purpose. Definition and purpose. Or benefits. Sometimes they ask purpose of corporate governance. Sometimes they ask benefits of corporate governance. Both are same. Number 2, UK combined code application to cases. Mark it as important. UK combined code application to cases. UK combined code application to cases, right? See, I'll take a separate color and write down this particular case, how it can be tested. It's like this. Just for your understanding, I'll tell you, a case will be given. This case can be related to governance, students. How ArivuPro governance is there. Governance means how you are governing an organization. Okay, that governance structure at Arivu, governance structure at Nexus, governance structure at Geo, whatever the organization, their governance, how they govern, that will be given in this case. Is it clear? From this case, you need to read that entire case and identify corporate governance issues. For that issues, you need to provide recommendations. You got my point what I'm saying? Right. There is a story how particular organization is governing, and that governing organizations might have so many problems. And we studied corporate governance code, and in the corporate governance code it says this is how you should govern, and they are governing in a different style. You comparing both and you finding out the issue, and for that you are giving a recommendation. That is not your recommendation, corporate governance code's recommendation. Is it clear? That's why I told, if you by heart corporate governance code, it's very easy to identify the problem. Clear? This is the most examinable question, right? Next one. Number 3, third point. Composition of audit committee. Composition of audit committee. Composition of audit committee. Composition of audit committee. Fine. Okay. Composition of audit committee. Fourth one. Advantages and disadvantages of audit committee. These are theories. Huh? Advantages and disadvantages of audit committee. These are theories. Number 5. Functions or roles of audit committee. Mark it as important. Frequently tested in the past paper. Theory. Functions and roles of audit committee. Functions and roles of audit committee. Frequently tested theory question. Number 6. Relationship between audit committee and internal external auditors. Don't worry about internal audit now, because here just I'll explain the relationship. There is another separate topic called internal audit. Once I teach that topic, you will clearly understand how it works. It's a pure theory. Okay. Is it clear? These are the points. Fine. Shall we move? All copied? Second point and the fifth point are the important ones. Second one is case study. Fifth one is theory, but repeatedly tested in the past papers. Shall I move? Okay, now tell you. How many of you all did accountant in business? Foundation? You all studied, right? No one. Define the word corporate governance. Anyone define the word corporate governance? What do you mean by the term corporate governance? No idea. No idea. Okay. There are 3 levels of management. Can you remember? Operational level, tactical level, strategic level. Together we call this as managerial levels. Understood? A person, concentrate, a person who works at operational level, who direct and control him, tactical level stuff. Yes or no? A person who works in tactical level, Brian, you take Arivu, the people who are at the manager levels, right? Tactical level, who direct and control. Strategic level people direct and control. Okay. Who direct and control strategic level people? Problem, right? See, try to understand in an organization, operational level people are direct and controlled by tactical level. Tactical level people are direct and controlled by strategic level. Strategic level, let's say board of directors, strategic level, who direct and control board of directors? Actually, it is shareholders. But the problem is, shareholders is an invisible hand. They are not inside the company. You got my point? Right? They are outsiders. Did you all study stakeholders? Internal stakeholder, connected stakeholder, and outside stakeholder. So shareholder is not within the company. Therefore, we can say that shareholder is an invisible hand. They have power, but by using that power, they can't prevent something. They can't prevent. Once it's happened, they can control. Right, in the AGM. The AGM only once in a year only, they are applying their power. All 364 days, who manage? Board of directors, agents. Shareholders' power is restricted. Understood? Understood? And another way. Shareholders are the principals. Board of directors are, management is agents. What is the role of agent? Maximize principals and other stakeholders' interest. Are they actually happening? No. Why it is not happening? Because these strategic level people have massive power. That's why it's not happening. If you take Enron, investors bankrupt, right? Investors only bankrupt ultimately. But the managers benefited. Satyam Computers, who bankrupt? Shareholders bankrupt. Who benefited? Management. So actually this management, before these scandals, before these corporate scandals, we observed professionals are not actually professionals. professionally qualified accountants are not professionals. They don't have values. They don't have ethics. Yes or no? Best example is accountants. Culprits. All the accountants. Why? Not I'm saying, you can't generalize like that, sorry. Just type in your Google and see. Accountants are, and stop. Then you will get some recommendations. See what are the terms that you are getting. Do you think that accountants are professionals? Do you think that doctors are professionals? Are doctors are ethically behaving in this country? In Sri Lanka? Yes. Are they ethically behaving? No. They can prescribe a lower price medicine, but they are prescribing higher price medicine because they are getting commission. When they can do normal delivery, they prefer cesarean. Why? Cesarean is expensive. They can 75,000 in Sri Lankan rupee, they can get it. But in Sri Lanka, we are not going to private hospitals. But what I'm trying to tell you is, think lawyers. Are they professional? What I'm trying to tell you is, professionally qualified people are not behaving professionally because they have massive power. Understood? If you take doctors in the private hospital, they have more power. Management is depending on them. Yes or no? Let's take this organization. Depends on the lecturers, right? Lecturers are professionals. Now, are they lecturers actually professionals? So what I'm trying to tell you is, all the profession, there are certain parties, they focus self-interest. But actually what is expected by International Ethical Standard Board? Public interest. Why I'm telling that? Why self-interest is possible? Because you have power. You have massive power. That's why you are trying to maximize what? Self-interest. If you are not applying corporate governance code before 2000s, corporate scandals because of poor governance. Why? These people, what they want, they can do. Executive directors. Right? Then the world realized importance of corporate governance. International Federation of Accountants and other bodies, they implemented corporate governance to reduce this power of strategic level people. So what is corporate governance? Something which gives, it's a kind of a rule book. In India, do you all have constitution? Do you all have constitution? What is the role of constitution? Modi can't do whatever he wants. He should comply with constitution. If the constitution is not there, Modi can do whatever he wants. The powerful people can do whatever they want. Sorry, understood? Here also the strategic level people, executive directors are more powerful. Now we are implementing corporate governance. Why? To reduce their power. Corporate governance is like your constitution. Constitution for an organization. What you should do, what you should not do. All these things are instructed by corporate governance. Now these people can't take their own decision. They need to comply with this rule book. When they try to comply, their massive power, before they have that massive power reduced. And shareholders, representatives comes into the company. What is the problem we have? Shareholders are the powerful people, but shareholders are outsiders. Then corporate governance says, okay, you are outsiders, bring some representatives from your side into the company to reduce the power of executive directors. That's how the concept of board of directors created. Executive directors and non-executive directors. Executive directors are the parties who employed in the company, who run the business. Non-executive directors are outsiders. They are not employees. They are outsiders who represent shareholders. Now the board comprises with executive directors and non-executive directors. Executive directors cannot do whatever they want now if corporate governance is implemented. You got my point what I'm saying? So two power blocks. Right? If I take the world now, who is the most powerful country in the world? US. Before 1960?
China.
1960 period, US, Russia, two power blocks. When in the world there are two power blocks, world is in a safer situation. Why? When there are two power blocks, this fellow's afraid to fight with that fellow. That fellow is afraid to fight with this fellow. There is no superior. You got my point. World is safer place. But when there is a one power block, then problem. You got my point. That's why in India and all, we are not practicing unitary government. Two power blocks are there. Right. So what I'm trying to tell you is that same concept is here. Executive directors and non-executive directors. Two power blocks when they are taking decisions. Right. Understood. Corporate governance understood. So ultimately, why we need corporate governance? To reduce the power of executive directors. Why? Because of that massive power, they manipulate and they maximize self-interest. If we reduce that power, if we bring shareholder interest inside the company, they can't do whatever they want. Now, after implementing corporate governance, it's like your parliament, ruling party and opposition party. Fine. Ruling party and opposition party. You need to get the consent from both parties. So certain important decision, 2/3 majority is needed, which means opposition parties also need to support. Power reduced, right? If only ruling party is there in the parliament, what will happen? Whatever they want, they will do. Same thing happened here. So that's why we need corporate governance. So why we need corporate governance? Reduce the power of executives. That is the primary purpose. Okay. So take out your tute. Take out your tute. Write it down. Under this slide, write it down. Corporate governance. Write it down. Corporate governance is the way of directing and controlling. Corporate governance is the way of directing and controlling an entity. Okay. Now I'm going to give different points. Try to understand those points. Okay. Second point. Corporate governance. Corporate governance. Corporate governance. Second point. Corporate governance. Expected to reduce the massive power. Expected to reduce the massive power of executive directors. Executive directors. Clear? Third point. Executive directors are full-time employees. Executive directors are full-time employees. Executive directors are full-time employees and headed by Chief Executive Officer, CEO, and headed by Chief Executive Officer, CEO. So who is the head of executives? Who is the head of executives? So CEO is the captain of the ship. He takes all the decisions related to what? The company. Right? So who is the most powerful person in a company? CEO. As a result of that power, shareholders' absence is also there. That is what we call shareholder absenteeism. What is shareholder absenteeism? Shareholder is not actively involved within the board, within the company. You can't ask all the shareholders to come to attend the board meeting. Right? As the result of that, who is the most powerful block here? Executives. And who is the powerful person? Chief Executive Officer. Is it good for the company? If that person is good, it's good. If that person is like bad, like the doctors, most of the doctors are good. Some doctors are money-minded. Lawyers, money-minded. Some people, not all. Likewise, some accountants are money-minded. Some CEOs are money-minded, even though they professionally qualify. So they can misuse. As a result of that, what happens? Corporate collapse. Clear? Now, corporate governance says how to govern this particular company. How? It brings external parties, representatives of shareholders to the board. to reduce the power, right? So write down third point or fourth point? Fourth point. Corporate governance brings shareholder representatives, shareholder representatives, shareholder representatives, shareholder representatives to the governance. Shareholder representatives to the governance. Within bracket write down NEDs, non-executive directors. NED, non-executive directors. Within bracket. Next point write down. Non-executive directors are external experts. Non-executive directors are external experts. They are not employees. Huh? External experts who brings external expertism to the business. Who brings external, non-executive directors are external experts who brings external expertism to the business. Who brings external expertism to the business. Right. That's the benefit of diversity. Let's take US. Right. They, I think now they call for green card. Yes or no? Green card lottery. You heard, right? Green card. US green card lottery. You don't have idea. Every year that US call US lottery green card. In India, how you call it? No idea. You don't know about green card. Is it not there in India then? Just Google and see, which means in Sri Lanka, every year US call green cards. Green card means residential status. It's a lottery. And if you applied and if you get, in our organizations also 3 lecturers they got. In Sri Lanka, normally we get 9, but I didn't apply. What I'm trying to tell you is, why US is giving green card lotteries to the world? Diversification is very important. Right? They are taking experts, different people, educated or uneducated or whatever. Diversified people they are taking to US. Why? Those people can add value to that country. You got my point what I'm saying? So likewise, why we bring non-executive directors to the board? Those non-executive directors are not fools, huh? Experts. They works in corporates, well-qualified people. So we bring those experts to the board to get their ideas. They are the representatives of shareholders. So they can challenge executive directors. Through that, executive directors cannot do whatever they want. Understood? So that's what NED means. NEDs bring external expertism to the business. Right? If I take myself, I am coming from Sri Lanka. I am bring some kind of an expertism here. Yes or no? So that is very important when it comes to diversity. So next point write down. Non-executive directors. Non-executive directors. Lot to write today. Huh? Non-executive directors are external parties. External parties who challenge executive directors. Who challenge executive directors. Who challenge executive directors. And enhance shareholder interest. And enhance shareholder interest. Right? Next point, write it down. There are two types of non-executive directors. There are two types of non-executive directors. Number one, Independent non-executive director. Independent non-executive director. Independent non-executive director. What is independent non-executive director? I'm taking a person from outside. That person do not have any connection with the company. Right? Like auditors, that person don't have any connection with the company. That is what called independent non-executive director. Is it clear? Number two, second type, non-independent non-executive director. Non-independent non-executive director. Non-independent non-executive director. Who is non-independent non-executive director? It's like this. Concentrate. These are important. Why I gave all these points? When you do past paper questions, you will realize, right? Let's take like this. This is the company. Okay. I'm recruiting a person called A. Right? He don't have any connection with the company now. He is an external party. He is an external party. Clear? But 10 years before, he worked as CEO in this company. At the moment, he don't have any connection. But once upon a time, he worked as CEO. Once upon a time, he worked as CFO. So there is a connection, not now, earlier. Then it is known as non-independent non-executive directors. Understood? Is it clear? Next point right now. Non-executive directors remuneration. Non-executive directors remuneration. Non-executive directors remuneration should be fixed. Should be fixed. Non-executive directors remuneration should be fixed, comma, should not connect to what? Exactly, company's performance. Very good. Should not connect to company's performance. Clear? Take a separate color pen and write down. Next point. An independent non-executive director. An independent non-executive director. An independent non-executive director. An independent non-executive director can be appointed as chairman who takes the leadership of the board. Who takes the leadership of the board. Who takes the leadership of the board. Concentrate. See here. Before corporate governance, this is before. Before corporate governance, who run the board? CEO plus executive directors. You got my point? This is what the management. As a result of that, they get what? Massive power. By misusing their power, they maximize self-interest. Clear? Now corporate governance. After applying corporate governance, board is changing like this. Executive pillar headed by CEO. Non-executive pillar headed by chairman. Right? As a board, who is the leader? Chairman. You got my point? So non-executive's head is chairman, executive's head is CEO. As a board, a collective board, who is the leadership? Chairman. Now tell you, when you see these two, can you realize the power is reduced now? This is how we reduce the power. Understood? So chairman is representing non-executive directors and he is the head of the board. Okay. Another point, write down. Chairman takes the leadership of the board. Chairman take the leadership of the board and maintain relationship with all stakeholders. And maintain relationships with all stakeholders. And maintain relationship with all stakeholders. Right. Now take a separate color pen and write down. As per UK Corporate Governance Code. As per UK Corporate Governance Code. Am I fast? As per UK Corporate Governance Code. As per UK Corporate Governance Code. The same person cannot act as per UK Corporate Governance Code, the same person cannot be act as chairman and CEO. The same person cannot be act as chairman and CEO. So some person cannot be act as chairman and CEO. Right? But there are variations in Indian corporate governance, there are variations in Sri Lanka. Sri Lankan corporate governance, yes, can. Right? But I'm teaching UK Corporate Governance Code. That's why I ask you to choose your international version, not UK version, right? So this is common. So don't compare this with your local situations. Because sometimes when you are working in Indian situation, I don't know. Sometimes there might be variation. What we are studying here is UK. UK means international version, right? So same person cannot act as what? Chairman and right? Next point, write down. Better to appoint, next point, separate point. Better to appoint independent non-executive directors. Better to appoint independent non-executive directors, within bracket write down, other than chairman, close the bracket, as head to different corporate governance committees, as head to different corporate governance committees. So there are different types of committees like nomination committee, audit committee, risk committee. There are different committees. All these committees should be headed by whom? Independent non-executive directors, not executive directors. Committees we are not giving executive directors. It should be headed by whom? Independent non-executive director, but should not chairman. Why? If I ask him to take all the leadership, committee also take the leadership, board also take the leadership, too much of pressure, and you try to understand he is not a full-time employee also. As a result of that, he is unable to work effectively. You got my point what I'm saying? So let's take, I came here. Am I an employee of this organization? No. So I came here. So now management is telling me to take audit and assurance and advanced audit and assurance recording. That is fair enough. Morning 4 hours, evening 4 hours. I am working for 8 hours per day. So I am fine. If they ask you, can you teach SBR? Or do SBR also. Can you teach FR? You teach FR also. Can you teach F5? You do F5 also. Can I teach 5 subjects in one day? Let's assume I can. Because I am money-minded. And if I do that, what will happen to you all? From morning 5:30 onwards, I am teaching. Your batch is the last batch. What will happen to you all? You got my point what I am saying, right? So we should not ask chairman to take the leadership on all committees. Better take the board leadership and observe and monitor. Let them others to take the leadership to other committees. Is it clear? Understood? Why I am telling these things? I am giving all these points based on the past paper questions. These are the cases that tested in the past papers. So whatever things tested in the past paper cases, I'm giving as a points. So if you read these points, when you read those questions, easily you can understand. Right. Next point. Corporate governance can be implemented. Corporate governance can be implemented. Corporate governance can be implemented in the form of rule or in the form of principle. In the form of rule or in the form of principle. In the form of rule or in the form of principle. Right? Don't get confused. I'll teach you later. There are countries who use corporate governance as rules. I'll tell you later. And most of the countries, majority of the countries, it is principle. What is principle? What is the definition of principle here? You can comply. If you are not complying, explain why. You got my point what I'm saying? Understood? Let's take any vegetarian in this class? Hindus? Full vegetarians? Okay, fine. So, you all are traveling to somewhere. Okay? So, non-veg food is served to you. Right? You have a right. It's a principle. Okay? I'm not going to eat non-veg. Because non-compliance. Because this reason. So, there is a reason for non-compliance. Yes or no? That is what called principle. Right? Rule means you can't give those options. You should do that. So I'll teach you ethics. When I teach you ethics, I clearly told certain things should be in our life. It should be in the principle based, not in the rule based. You can't put rules for everything. Why most of the countries adopted principles? Because there are valid reasons for non-compliances. Right. Let's simple example. Make it very simple. I'm not going to advance on it. Make it very simple. Let's take India and Sri Lanka. Do we have more multinationals or do we have very small companies? Small companies, right? If we make corporate governance as mandatory for everyone, rule based, these small companies, can they survive? Can they able to recruit non-executive directors, chairman, committees? How much expenses? You got my point what I'm saying? So there are valid reasons for non-compliance. We are small, no need to comply. That is what called principle based. Understood? Now write down another point with a separate color. Executive directors and non-executive directors. Executive directors and non-executive directors. Executive directors and non-executive directors need to submit. Executive directors and non-executive directors need to submit ReElection. Underline the word ReElection. At regular intervals. Can you understand this point? Right. Normally, this is not a government job. Why people like government job? We can take pension, secured life. Even in India also, the people always like government jobs. Yes or no? Okay. I'll tell you a small story. Right. Before my father passed away 1 year before, right? So when I used to become a lecturer, right, I choose this career, right? So I want to become, I can't work under anyone. So I want to live a comfort life, right? So nice, right? I travel different countries. I'm not spending a single rupee. So all sponsored, good food, different experiences, nice life, comfortable life. Okay, but he always telling me, no, you should be a government job. You should sit exams like here IAS, IPS exams. Like Sri Lanka also there are exams. Okay, you should write those exams, or else you should be a lecturer in the state university. Right. Maximum salary as per Sri Lanka 75,000 to 155,000. and per month. That is not enough. Okay. Till that is his mind. Right. The end of the day, now he is no more. Right. So at last, what I did, I joined in a state university. Still now attached to a state university. It's a huge loss for me. Why I need to spend more hours there, even though visiting, I still attach. Why I'm continuing? Because of parents' wish. I know it's a loss. So what I'm trying to tell you is there is an attitude saying that government job is stable, pension is there. Concentrate. Director's job is not stable. Non-executive director's job, it is not stable. Lecturer's job is also not stable. If you performed well, the next time they will call you. If I performed well and if you score good marks, when they do audit next time, they will invite me. Yes or no? If I am not performing well and if all you fail, will they call me? So my job is temporary. Understood? Director's job is also like that. So corporate governance says don't recruit directors for 5 years, 10 years, 20 years, even chief executive officer. It's a learning point. Your phone. It's a learning point. It's a learning point. Okay. In a scenario, company A's CEO work for 10 years, 5 years. Corporate governance weaknesses or not? It's a weakness. Why? There is no permanent job. So regular interval, all the directors need to submit re-election. They resign and they get re-elected by the shareholder. If they perform well, they can re-elected. If they are not perform well, they cannot re-elected. Right? There are different periods, students. I'll tell you like this. Minimum 2-year interval. Some cases 3 years. Right? It's changing. Okay? Minimum how many years? 2 years. Maximum 3 years. So if I work for 2 years, I can re-elect. I can submit re-election. Maximum 3 years. Thereafter, I can't be there. Understood? So if you want, just within bracket write down minimum 2 years, maximum 3 years. Minimum 2 years, maximum 3 years. Next one. Another separate color pen. Very, 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 very important point. Board need to be balanced. Board need to be balanced. Board need to be balanced. You don't have space. For audit risk and ethics, better to write in the exercise book, because audit risk and ethics, I'll dictate too many points. Okay, you have to write, you have to draw, so many things are there. So better to write in the exercise book. I don't know how you're going to type. You need to draw also. Right? So I try to manage. See here, what do you mean by? Okay. What do you mean by the term balance board? Balanced board. What do you mean by the term balanced board? Anyone? What do you mean by the term balanced board? See example number 1. Executive directors 5. Non-executive directors 2. Is this board balanced? No. Another example. Executive directors 5. Non-executive directors 5. Is this balanced? Is this board balanced? No. I'll tell you what is balanced board. Executive directors 5. Non-executive directors 5. Excluding chairman. You got my point? What is balanced board? Executive directors 5. Now don't think 5 is, that's a number, right? Executive directors can be 10 or 15, right? Non-executive also 10 or 15, but excluding chairman. Chairman is a non-executive director or executive director? Independent non-executive or not independent non-executive? Independent. So non-executive directors 5. These people can be independent or non-independent, no issues. Plus independent non-executive director chairman. Altogether how much NEDs? 6. How much ED? 5. Now see who is more powerful. Shareholder representatives are more powerful than executive directors. This is what we call shareholder activism. Right. Earlier I used the term. What is that term? Shareholder absenteeism. Now I am using a word shareholder activism. What is activism? Actively shareholders representatives are participating in the board. Right. Now let's take like this. Executive directors 5. Non-executive directors 10 plus chairman. Is it good? My question is, executive directors 5. Non-executive directors 10, including chairman, it's 11. Is it good? Is it good? Now, this is the problem in our country, right? Sri Lanka, India and all. When there is a story, we need a hero and we need a villain. Now who is villain for you all? Executive directors. Who is the hero? Non-executive directors. So when hero is increasing, 11 heroes, like Ponniyin Selvan, right? And executive directors, 5 villain. Good. No. If an organization is in this case where non-executive directors are more than executive directors, it's like like this. 10 monitors in the class, only 2 students. How many monitors? 10 monitors. How many students? 2. Useless. Nothing to perform. Too many people to criticize. No one is ready to perform. The performing people are less. Criticizing people are more. Yes or no? In this case, poor performance. This is also not good. No one is there to perform. So don't believe just, right? So that's why corporate governance said board need to be balanced. If it is over non-executive, not good. Non-executive, that is also not good. Here too much power, here no performance. Understood? Understood? So write it down. Continue that point. Balanced board is continue. Balanced board is same amount of executives and non-executives, same amount of executives and non-executives, excluding chairman. Excluding chairman. Excluding chairman. Okay. Next point. Write it down. If you read all these points, because when you take these slides, within these slides, these points are there. But why I gave all these as a points? Then only it feed into your mind. These are the rules you need to follow. You need to by heart when you are doing questions. You got my point? So if you don't have time, don't refer tut. Just refer these points. That is enough for case study, not for theory. For theory, you need to by heart audit committee and all, right? So write down. When a company comply with corporate governance code, when a company complies with corporate governance code, COD, comma, number one, reliability of financial reporting improved. Reliability of financial reporting improved. Reliability of financial reporting improved. Why? Why reliability of financial reporting improved? I'll tell you the reasons. There are different committees we form. One is risk committee, one is audit committee. When we form those committees closely looking at the process, financial process. Right? Control environment is very strong there. Then errors and the fraud misstatements will reduce. As a result of that, the reliability will improve. Understood? Number 2, effective, independent internal audit function. Effective, independent internal audit function. Effective, independent internal audit function. Why I am saying independent internal audit function? If corporate governance is not there, internal auditors are reports to management. Right? If management make a fraud or error, is it possible to identify and communicate to them? Sir, you did a fraud. No, sir. Can we report like that? No, right? Will anyone report like that? Understood? Then what happens? When corporate governance comes, we are reporting to audit committee. Audit committee is executive directors or non-executive directors? Non-executive directors. External party. More reliable, more trustworthy. You can tell. So more controls. Understood? So independent. Next one. It helps to protect independence of external auditors. Third point. It helps to protect independence of external auditors. It helps to protect independence of external auditors. There is a question. Should the number of directors be exactly same? No. It's not like that. Right? But good if it is balanced. Right? Normally, if executives are higher means power goes to executives. If non-executives are more means operations, performance get affected. This is how it works. That's why we try to balance both. Okay. Clear? All the points understood? Understood? Okay, now let's move to the TUTE. The advantages of corporate governance. Can you understand? First one is greater transparency. More transparent procedure. And a greater accountability. We can answerable. Efficiency of operation. Operation become more efficiency. Better able to respond to risk, because there is a committee called risk committee. We can able to respond. Mismanage. Is it possible to mismanage? Control environment is too strong. Therefore, it's not possible. So these are the advantages or purpose of corporate governance. Right? UK Corporate Governance Code. Concentrate now. Okay? Before moving to this. Right. Corporate governance. Okay? I'll ask you a question. In the world, which country affect most because of poor governance? In the world, which country affect most because of poor governance? Don't say India, because India and Sri Lanka, all these countries are not countable. Why? We don't have such a large organizations in the world. Our base is very small. That's why even 2007, when there is a huge financial crisis in the world, India got affected to some extent. Sri Lanka, we didn't get affected. Why? Because our financial markets are not that much big to realize that impact. Fine. Okay. Which country affect most? Yes, exactly. US affect most. Why? 2000 millennium. Any millennial students? In 2000, what's your age? 3 years? You born after 2000? 2000s? After 2000s? My God. Too small. Right, okay. You are too small then. Fine. It's good. So when this comes to 95, 96, I think 96 I'm grade 1. Right. So now counting age. Okay. Don't worry. So what I'm telling is 95, 96 period, everyone welcome this millennium period. Millennium, the world going to change. Right. The world become more developed. Like that, so many rituals and stories. When 2000 started, all problems. Financial crisis, food crisis, Enron collapse. Most of the corporates get collapsed. Right? And war problems after 2000. We can divide before 2000 and after 2000. So US affected very, 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 very large implications. Because largest organization in the world is US. And if something happened to US, it affect entire world. That's why 2004 Enron and WorldCom, Trico, largest organization in US, and most of the banks, US banks, get affected. 2007, yes, 2007, it result financial crisis in the world. The grassroots reason is what? Man, if now Sri Lanka also in a crisis, as a result of that, India get affected? No, not any country get affected. But if something happens to US, the entire world get affected. South Asian region, Pakistan is the country affected most because of the financial crisis. Because Pakistan depends on the US. Right? So what I'm trying to tell you is, US is a country. When I walk in the road, man, I'll put hand free and I'm going. Pollution, no? Sound is a pollution. You all know that? Okay, leave it. So US affected most. Now US decided, okay, hereafter, we can't expect ethical behavior, professional behavior, public interest from these professionals. Man, no. Hereafter, governance code is rule. All the organization should follow. Right? That's how US implement an act. Yes. What is that? Exactly. SOX. Superb. Where you study? Which book?
My brother studied CPA. He told me.
Exactly. SOX. Sarbanes-Oxley Act. SOX is a corporate governance. Very good. SOX is a corporate governance, but in the form of law. You might study Sarbanes-Oxley Act. SOX means not this SOX. Huh? Sarbanes-Oxley Act. Huh? Not in your syllabus. Don't worry. Sarbanes-Oxley Act. Sarbanes-Oxley Act is a form of corporate governance, but it's in the rule form, rule-based. All the companies should comply the requirements of corporate governance. You will study Sarbanes-Oxley Act in your paper called Strategic Business Leader, SBL. Right. Rest of the world, they believe principle-based approach. What is principle? Comply or explain. This is divided into two. One is, I am talking how corporate governance appears in the world. One is UK Corporate Governance Code. That is what we are going to study now. The other one is rest of the world, most of the developing countries. Most of the developing countries. Developing countries, what they did. You all know that economic system, right? There are three types of economic systems. One is closed economy, and the other one is open economy. Third one is mixed economy. There are three types, right? If you take Sri Lanka before 1970s, it is closed economy. Now, all around the world, it is open economy. Some economy is mixed economy. They take that one and this one, mix together and they practice. Corporate governance, the developing worlds, what they did, they took rule-based corporate governance principle. They took UK-based corporate governance principle. They put together and they apply in their country. But application is principle-based. You got my point? That consists both component from rule-based and principle-based. But it is implemented through two bodies called ICGN and OECD. This is like SAC. SAC is a union, right? In that union, there are 7 or 8 countries. Those countries will practice the principles decided by SAC. Likewise, ICGN and OECD also kind of a union, a community. Member countries, India, Sri Lanka, we all are member countries. And we apply corporate governance with a mixture of rule-based and principle-based. But we are not applying in the form of rule-based, we are applying in the form of principle-based. But even though we are applying principle-based, the rule-based conditions also included. Is it clear? So the world is utilizing, or the world is practicing corporate governance in these three ways. Clear? But in our topic, we are going to study this one. Understood? Is it clear? Now understood? Now let's move to your examinable points. What is the first point? Definition and purpose of corporate governance. Benefits. Understood? Yes or no? Then UK Combined Code. Right. Still I didn't teach. That's what I gave the points. Huh? Move to your flowchart. Definition of corporate governance understood. Purpose of corporate governance understood. Approaches to corporate governance understood. One is rule-based, the other one is principle-based. Rule-based Sarbanes-Oxley Act, principle-based UK Combined Code, and also you can say ICG and OECD principles. That is not there in your syllabus. Why I put? Because you should understand how corporate governance is practicing around the world. When you come to professional level strategic business leader, then I'll teach you, or someone else will teach you, how ICG and principle will apply. How Sarbanes-Oxley Act will apply. There are different parts. We're going to study Sarbanes-Oxley Act in detail under SBL, not in our syllabus. So this is also not in syllabus. This is also not in syllabus. But why I teach? Just for an introduction. Then when you comes to SBL, it will be comfortable for you to study, right? Because normally we teach corporate governance UK, corporate governance UK. When it comes to SBL, if someone is telling corporate governance is in the form of law, you get confused, right? So now let's move to UK Combined Code. Now let's move to UK Combined Code. Is it fine? So far everything is okay? Everything is okay? Any questions? Yes. Doubt? Online students, is everything okay? Right, now let's see. See, this is UK Corporate Governance Code. This is UK Corporate Governance Code. And if I take UK Corporate Governance Code earlier, 2018, before 2018, it is identified as Section A, Section B, Section C, Section D, Section E. Now it is changed as 5 components. These are the 5 main components of your corporate governance code. Fine. If you take your constitution, there are sections, right? Likewise, in the UK Corporate Governance Code, these are the main sections. There are 5 sections. What are the 5 sections? Number 1 is, it speaks about board leadership. Number 2, it speaks about division of responsibilities. Number 3, it speaks about composition, succession, and evaluation of the board. Right? And the 4th one, audit, risk and internal control. 5th one, remuneration. I didn't include all these things in detail. Whatever relevant for your exams only I included. But, make a note, but please refer Combined Code fully in the study text. You all have study text, right? You all have, normally I'm not telling you to read study text, but this area, because I summarized as much as possible. Better to read Combined Code from the study. Not everything, just only this Combined Code. If you go to study text, these are the 5 main points there. Refer those points. Refer those points. Understood? It's a homework. Today you should do. Mansilai, shall we look at one by one? First one, board leadership. Right. But when I gave points, I didn't categorize like this. I gave all the points together because it's comfortable for you all to by heart or study. Right. Now let's move to the leadership. See, first one. The leadership says, underline this word, effective board. Board is comprises executive directors and non-executive directors. Yes or no? Executive directors and non-executive directors. Executive directors are full-time employees. Yes or no? Full-time employees. Yes or no? Permanent. Yes or no? Very good. Not permanent. Good. ReElection is there for them also. Superb. Right. And when it's become effective board, you should recruit proper competent people. It's not easy. Not only executives, non-executives also you need to recruit competent people, right? Organizations, let's take RU, lecturers, different lecturers. When they take a quality competent people, yes, the quality will be improved. Yes or no? So it depends, right? So normally corporate governance said effective board is needed. It is interconnected. I'll tell you that. If you understood, just take it, otherwise leave it. Okay? Bit too much. Effective board is possible when you choose proper people. Yes or no? To the board. How to choose proper people? There is a committee called nomination committee. I gave list of committees. That nomination committee need to filter out all the people in the market. They should take the proper people to the board. Yes or no? Their role is needed here. When you going to take a proper people from the market, quality products are cheap or expensive. Quality products are cheap or expensive. Remuneration committee need to play important role there. If they said, no, we can pay this much only. If you wish, you can come. Otherwise, we will search someone else. So remuneration committee should think about their competencies and their performance. Based on that, they should decide a remuneration. Then only you can attract them. You got my point? So behind the role of effective board, the functions of nomination committee is there. The function of remuneration committee is there. Understood? Understood? The second one, the board should establish a company's purpose, values, and strategy. The director should lead by example. Underline the word lead by example. Attitude, important. Right? How many of you all wants to become accountants? Raise your hands. How many of you all want to become accountants in your future? One. How many of you all want to become managers? How many of you all wants to become CEOs? Without being a manager, how are you going to be a CEO? There are 3 levels, right? Operational level, tactical level, then only strategic. You all want to become a CEO now itself. Then what is your expectation? Career expectation? Kerala people, what is your career expectation? Going to contest the election. Why you all are doing ACCA? What is your career objective? What is your career objective? You. அப்படி ஒன்று இல்லையே, அப்படி ஒன்று நான் யோசிக்கவே இல்லையே. No. Yes, you. Hedge funds. Fund manager.
No,
Analyst. Superb. Good. Once you're done with ACCA, do CFA and become financial analyst or business analyst. Life settled. Why? That career will survive forever. If you become an accountant, one day it get replaced by systems. But my point, you all know more than me, right? Because you all are living in an electronic city, IT city, Bangalore IT, right? Okay. Why I asked that question? What do you mean by the term lead by example? The people who are in the board should have entrepreneurial qualities. Entrepreneurship. Leaders who are in the board need to be entrepreneurs. You got my point? Understood? They have to think in that way. Right? If I take myself, wherever I go, I see the business opportunity. At least for myself or else my team. Right? Today I came for audit, right? So next time I'll bring my team, other people. Their business have opportunities. Always we should see that opportunities and we should capitalize. Yes or no? That type of leadership is needed. Right? People who are working for salary is not suitable. They are not creating effective board. Why I am teaching this much? Because when you are reading a case study, you should be able to understand the leaders or the board of directors work for money or work for salary or entrepreneurial qualities they have. They should have entrepreneurial qualities. What is the meaning of entrepreneurship? Anyone? What is mean by entrepreneurship? Business. Entrepreneurship means business. Good. Anything else?
Creating business.
Creating business. Anything else? Taking risk. Good, da? Taking risk. In your life, if you take risk, the returns are very high. Right? That is a rule. If you are in the comfort zone, you can't. Tell you what is entrepreneurship. Shall I tell you? Yes. Yes. Exactly. Value addition. Value addition is entrepreneurship. Someone is inventing. Steve Jobs is an entrepreneur. Mostly, if I ask who invented Apple phone, Apple technology, it is not Steve Jobs. It is MIT. The technology comes from the research. Right? You all know, right? Research, thesis, knowledge gap. We are creating knowledge. We are finding something, invention. That invention need to be innovated by entrepreneurs. In our countries, there are lots of inventions. We don't have entrepreneurs to innovate. When entrepreneurs innovate, a market is created. That's why I'm telling you, entrepreneurs are value creators. They are creating value. You got my point? Understood? You got my point? Apple, orange, fruits. When you convert it value addition, fine, drink, lazy, there are different brands, different items. A value addition. This value addition is done by entrepreneurs. You got my point? That type of leadership is needed. Right? So when you are reading scenarios, you should understand whether they are given entrepreneurial leadership or not. Third one, the board should ensure necessary resources. Exactly. Board should need resources to function. Lack of resources is a governance failure. So corporate governance said they need proper resources. The board should effective management with encourage participation of shareholders and stakeholders. See here, the board need to ensure and encourage the participation of shareholder and stakeholders. Simply I can tell, not only looking at profit, look at all other requirements as well. Then only your board is effective. If you make profit and money, it does not mean that you are performing well. Right? If you perform well by looking at your stakeholders, by looking at your shareholders, that is only good performance. Understood? The next one, the board should ensure the workforce policies and practices are consistent with company values. Simply, ethics, culture is very important. Right? Next one. Chairman's role I am not going to discuss. Chief executive's role I am not going to discuss because already I discussed. CEO is the head of executive directors. Chairman is the head of board and he is leading of the non-executive directors pillars. Right? And both chairman and CEO role need to be split. Same person cannot play both roles. Right? Understood? This part clear? Executive directors are the people who run the business. They are full-time employees. Right? But re-elected in a regular interval. Non-executive directors are experts, expert people from the outside, and we take those people to bring external expertism to the business. Right? And there are two types I gave, independent and non-independent, which is not included here, but I gave. Understood? And their advantage and their disadvantage. The main advantage is they are the oversight of the whole board. Why? Who is the leader of the board? Chairman is executive or non-executive? Non-executive directors are like watchdogs. Non-executive directors are like watchdogs. You can't easily convince them. Because how to convince them? You should add value to shareholder. Then only they will convince. You should add value to stakeholder. Then only they get convinced. Otherwise, it's not easy to take. Constructively, they challenge. Right? So they are oversight. As they are independent, they act as a corporate. What do you mean by that term? Exactly. They they are not biased towards shareholders. They are not biased towards executive directors. They unbiased and they balanced all the stakeholders required. As I said, they are the representatives of shareholders. It does not mean they go behind the profit. If something went wrong in the environment, they raise. If something went wrong for the society, they raise their voice. So they always prudent, they always balance for their profession. Right? That is very important. External expertism to the business. Yes, they bring external knowledge to the business. Disadvantage. What is the disadvantage? All these are good. But the problem is how to find these non-executive directors. There are a lot of people in the market not performing well. I'll tell you, in Sri Lanka, there are more corporates bankrupt. More corporates bankrupt. Why? Board of directors never met for last 2-3 years. They get the salary. They are not adding value. You got my point. Understood? So it's not. That's why I'm telling always. You should. It should be a passion. If I take myself, I have all the tudes. Why I'm preparing a bit? I can give those tudes. I can do, let's 4 hours. So as agreed number of hours, I can take the payment and I can leave. Right? But that is not required. You should give something, a value addition. That's why we recruit non-executive directors. But here it's not, practically it is not true. Very difficult to find people like that. They come, they work. They are not interested in the company. They treat the company as an external party. They are not feeling it's my part of, I'm part of this organization. Why? Because 2 years, not permanent. Why I should work? Fine. So that is the risk. Second one. Here, they are taking the supervisory role. In the committees and all, they are there. They are the people who take the responsibility in the committees. If they are not actively performing, entire control function get affected. Internal auditors get affected. External auditors get affected. Those risk is there. And normally, good people charge a lot. That is also a problem. Right? So, there is a balance, right? So, when even in Sri Lanka, still the crisis is there. Inflation is more than 180%. But as a lecturers, we didn't increase our lecture rate. Fine. Instead of that, what we did was, we did foreign lectures. Because when we take in the form of dollars, we can survive. So we find some alternatives. Why? Think if we increase our rate, what will happen to students? Students need to pay more course fee. Already they are struggling. If we ask to pay more, currency is depreciated. ACCA is now very expensive there. So all these are the things, public interest. Fine. But non-executive directors charge more. They say, okay, if you give this much of money, I'll come. Right. It's expensive for the business. Right. That is the reason why countries like India and Sri Lanka, we have valid reason for non-compliance with corporate governance. It is very expensive. It is very complex. Right. And in Sri Lanka and India, I'll tell you, think about like this. In your house, father big or mother big, who is more influential person? If both fellows are started to fight, can you live? So normally, if father is an attitude person, mother need to tolerate. Yes or no? If a mother is an attitude person, father need to tolerate. Then only you can run that family. Yes or no? If both are ego people, attitude people, problem. That is what happening in corporate governance. 2 power blocks. CEO, chairman. Whether you big or myself, I am big. That power struggle is there. The major disadvantage of corporate governance. That is not because of the corporate governance guideline. That is because of our attitude. That is because of our, yes or no? Yes or no? So when I sit, right? If someone comes, I'll put my leg top of my other leg. Because I'm a lecturer. Is it correct? You got my point I'm saying? And people are not respecting others. Saying, I earned this much, why I should speak to this fellow. So those kind of attitude problems create the issue, not the system. So corporate governance is right, but the power problem created because of the attitudes. That is also one of the major problem in this company. Clear? Division of responsibilities. See, first point, all these things I gave, Chair leads the board. Who is chair? Chairman. Understood? Chairman should ensure effective contribution of all board members. So he should take the work from the all members. Active board participation is needed. He should ensure that. That is his role. Okay. That's why I told you, don't take chairman to other committees. Let him do his work. Third one, the chairman should ensure directors receive clear, accurate, timely information. Both executives and non-executives. Those who are in the committees, they are getting correct information on time. Right. So if the information is received late, that is also result delays in the decisions. The board should be balanced. Understood? Balanced board. The meaning of balance understood. The next point, NED should have sufficient time. That is also important. I told you, NEDs are outsiders. Normally they do not want to spend much time with the company. Chairman's role to take them and get their work done. Understood? The board should ensure the policies and process information, time, resources needs to be function effectively and efficiently. So simply here I am saying the board need to be efficient. The function need to be efficient. Is it clear? Is it clear? Any questions? Am I fast? Nomination committee. Concentrate. Don't look at that. Nomination committee. What is their role? Filtering proper people. Appointment by shareholders. Filtering proper people. The filtering process is not easy. Filtering process is not easy. Even when we try to recruit lecturers, it's very difficult to take proper people. Right? They got prizes, they got first class degrees, right? But when it comes to the output is not good. And the very sad thing is, after the results only we realize their outcome. You got my point? One, results. Results is the measure of a lecturer's performance, nothing else. Right? But there are two ways. Students also need to participate. But if both happens properly, the results is the outcome. Right? So here, nomination committee filtering people, directors, when they filter, they should take effective people to the board. That is their role. Right? Here, I'm not going to teach much because there is a concept called cross-directorship. Right? It is not there in your syllabus, but if you want, I can teach you. Right? It's like this. Why nomination committee's role is very important. Otherwise, cross-directorship will arise. Okay? I'll explain for your knowledge purpose. Right? If you understand, that's fine. Otherwise, leave it. Okay? Because that's not there in your syllabus. Now, don't ask if it is not there, why are you teaching? Okay? It's like this. Executives and non-executives, right? And nomination committee is not independent. Their NEDs are there, but it is not independent. Assume like that. They are not working in a proper way. So let's take like this. Executive director, non-executive director. So who is executive director? Nelson working as an executive director in X company. Nelson is working as an executive director in X company. And another person called Ram. He is working as an executive director in Y company. Okay. Your nomination committee is not working properly. X is an executive director of company X. So X influence nomination committee and ask to recruit Y as non-executive director to their company. You got my point what I'm saying? So this Nelson and Ram, both are friends. Like here you studied, Ryan, these two fellows are friends. Now Nelson is working as executive director in X, CEO in X. Ram is CEO in Y. Now X company CEO Nelson influence nomination committee and recruit Ram as non-executive director. Understood? Now Ram is the chairman of X company. Understood? Understood? Now Y, which means Y company, Ram, chief executive officer, he influence nomination committee and he recruit Ram as non-executive, he recruit this other fellow, right, who Nelson, as non-executive director and he is appointed as chairman in Y. You got my point? This is what called cross directorship. Now think, is corporate governance objective met now? Ultimately lost, right? Executives and non-executives all are in one pillar. Whatever executive wants, non-executive will support. You got my point what I'm saying? This is what called cross directorship. This should not happen. For that, an intermediary is needed. What is that intermediary? Nomination committee. That's why nomination committee's role is important. If nomination committee should not get influenced by anyone, they should be independent. Understood? Is it clear? Everyone understood? So, nomination committee, corporate governance said 100% independent non-executive directors. See the word, independent non-executive directors. Why? If we put non-independent non-executive directors, still they can, yes, get influence. You got my point? Understood? Right. That is the role of nomination committee. Very, very important. If nomination committee is not performing well, ultimately it's affect the governance structure. Understood? So just go with nomination committee. Next one, audit risk, internal control and audit committees. So this is the function ensure transparent policy and we should implement internal controls. Proper sound internal control should be there. Financial reporting framework need to be fair and reliable and trustworthy. Risk assessment need to be done. And there should be a proper control and risk framework to assess all the risk. Clear? This is what mentioned here. Just read and see. I'm not going to discuss that. Now let's come to audit committee. Right? Okay. Put a heading in your exercise book, audit committee. Audit committee. Right. See, audit committee, it's like this. 100% independent non-executive directors. Audit committee is 100% independent non-executive directors. That is the first condition. The second condition, for a small organization, minimum 3 independent non-executive directors are needed. Minimum 3 independent non-executive directors are needed. It's there in the tutor. No need to write, it's there in the tutor. But within these 3 independent non-executive directors, one person should be financially expertised. What do you mean by financially expertised? For example, partner who can able to oversee the financial reporting process and audit process. Right? Understood? Understood? Right. Audit committee 100% independent non-executive director. One should be, minimum 3. More than that you can if it's a big organization. But one should be financially expertised. Understood? And their objectives are given. Public confidence to be improved. Audit committee enhance the public confidence. Audit committee increase the financial awareness. And audit committee maintain the relationship with the external auditor. Those are the objectives. And if I take the functions of audit committee, reliability of financial statement improved, controls to be sound, effective controls, and internal audit function need to be more independent and effective, external auditors' independence to be protected, and also whistleblowing. What do you mean by the term whistleblowing? What do you mean by the term whistleblowing? Exactly. Rumors means that happened, it happened, right? But whistleblowing is a kind of a rumor, but it's like this. When you work in an organization, when you adapt to the culture, that's the benefit of adapting culture. Culture is not your Hindu culture or Muslim culture or Islam culture or what a Christian culture. It's not that culture. Organization culture. Organization do not have religion. Right? Organization culture support to organizational objective. Try to understand that. That culture makes you more ethical person. more likable person. You got my point? I'll ask you a question. Vegetarian people, will you eat non-veg? If I give 1,000 rupees, will you eat non-veg? Okay, if I give 1 million, will you eat non-veg? No. Good. Any Muslim people in this class? Muslims? Will you eat pork? I'll give US visa. Will you eat pork? Okay. Why? If something is prohibited by your religion, something is prohibited by your culture, it is too strong. So if you adapted to organization culture, if your organization culture is prohibiting something, fraud is wrong, you definitely adapt. If someone is doing that, you raise your voice against it. You got my point? You will raise your voice against it. Someone is doing fraud that is not accepted by organization culture. You get angry. Yes or no? Yes or no? Make it simple. In front of you, if someone is eating pork, how you feel? Happy? In front of you all, if someone is eating beef, are you all happy? Are you all happy? No, right? Why? You need to raise your voice. True. Accepted. That's why I told that rule-based approaches won't work here. So here, we need to accept. That is what called whistleblowing. When something is against the practice, you should raise your voice. But when you are raising, there's a problem. I'm a junior staff. Can I raise my voice against my senior staff? That's why I told it's a kind of a rumor. So indirect way, I'm telling this is happening. It's not a formal reporting line. It's not a formal reporting line. Petition. Did you heard petition? Is it there here? Petition, the term petition. Huh? Petition is a kind of a whistleblowing. Understood? So the whistleblowing, ultimately, the control culture is improved if there is a audit committee. Understood? So far it's clear? So objectives of audit committee, just go through, I explained. Benefits of audit committee, go through, right, theory, right? Problems. The main problem of audit committee is recruiting proper people. Audit committee is such a strong committee within the corporate governance. If you are not recruiting proper people, then there is a problem. Why? External auditors also mess, internal auditors also mess, all the controls get failed, financial reporting frameworks get affected, operation affected, risk affected, chapter close. Right. Right. Now time is 6 o'clock. Let's take a break. After that, we'll start the questions. Okay. There's a small area. Then we can move to the questions. Take a break.